Ambareesh Baliga joining us for more on this. Ambareesh, how are you looking at the numbers and in context of the valuations?
Good morning, Tamanna. In fact, I mean, if you see most of the headlines, whether it's the newspapers or whether it's the social media, I mean, profits down 90%.
Yeah.
Yeah, but then, I mean, you need to look a bit deeper. I mean, food delivery, which is their major bread and butter business, like the revenues were up, the profits were up. Hyperpure, which is B2B, revenue is up, losses are lower, which is positive. I mean, where the losses are coming in from is quick commerce, Blinkit, because revenue, I mean, 2.5x of, I mean, on a Y-on-Y basis. I mean, clearly, if you're chasing growth and there's an investment, and especially looking at the way the competition is, clearly your spends are higher because of which you're showing losses. But then maybe in the next possibly 4 to 6 quarters, I think you'll see a different picture as far as quick commerce is concerned, because I think by then the competition will die out to a certain extent. I mean, you look at the cash position which they have. I mean, 18,900 crores. I mean, that's I think what about 3 or 4 times what Swiggy has, the closest competition. The other property which they have going out, which is District, I think that will take a while. Possibly it is where Blinkit was 2.5 years back. And the other thing one needs to also look at is the depreciation also has shot up by 100%. So all these have contributed to the numbers, which on the face of it, I mean, may not really look good. But then looking at the sort of a growth which they can deliver over the next possibly 2 years, I think, if the stock comes down because of, the headline numbers, I think it's clearly a time to buy.
Hi, morning, Alex here. The point is that it's pretty much the opposite of what you're suggesting, because the numbers came through during market hours and it ended 6% higher. So the question is not whether it will fall. Yeah. So the point that I'm asking, the question that I'm asking is that and all of the points that you've made are absolutely true. The only question is the price that a prospective investor, somebody who does not have the stock, would have to pay. And the multiples are egregious, to say the very least. And so therefore, at what point do you say, I cannot afford this?
No, because see, in stocks like these, you cannot be looking at multiples. I mean, if you look at multiples, if you go by the regular sort of analysis, you may not really, buy the stock even at 150 rupees. But then a stock delivering this sort of a growth, and when they start reporting, like the margins, I mean, you clearly see the profits multiplying. So I would say, I mean, in case it goes up to levels of say about 325, 350, yes, possibly I would wait out. But then in case I see a correction to levels of about 240, 250, I think that will be the level to buy again.
Trying to understand, good morning, Neeraj here. Are these levels which give you individual comfort? Because like you said, 200 pe bhi stock will look expensive, 350 also it will look expensive. So if you are wanting to sell at 350, what's the argument there? And if you're wanting to buy at 250, what is the argument there?
I'm not saying I'll sell at 350.
Acha, you are saying don't buy at 350.
Yeah.
But buy at 250. Okay.
Yeah, if it goes up to 350, maybe I'll stay out for a correction. But at 250, surely I'll be a buyer.
Okay.
And at about 280, 290, I'll just hold on. Yeah.
About the competitive landscape, it's not like there aren't competitors there. Zepto may list. That is on the anvil. We know Amazon is coming into the quick commerce space. They've already started their 10-minute delivery in some spots. What is making you confident that an Eternal will maintain the head start even in quick commerce, which seems to be the big driver? Let's be honest, it's all about Blinkit right now.
I mean, see, you look at the sort of a growth which they have been able to achieve. And surely you'll have competition. But again, possibly you'll have number one, which would be Blinkit. Your number two could be a slightly decently far away competition. And then you won't even count the 3, 4, 5s. I don't know whether this is the right sort of a comparison, but again, go to the paint space in the last 20, 30 years. I mean, where was Asian Paints and where was the rest of the competition? So it could be something similar when it comes to quick commerce. You may have a very large number one, a decently far off number two, and then the rest of them are there, but they won't be counted.
So right now, at this point, if for some reason someone has missed out their entire bus on Zomato, would you say they should look at an Eternal, or should they look then at a Swiggy for a similar kind of a play? What would be the advice here on the stock this morning?
I would say that still go with Eternal.
Okay.
Although
Buy right now at these levels?
I mean, if you don't have, yes, you should. If you have, possibly don't buy more at the current juncture. Possibly, I mean, you can afford to wait for a correction, because in case you go wrong, you don't miss out completely.
Okay, so